Jahangir Aziz, Head of Emerging Markets Economic Research at JPMorgan, also with us joining in this conversation. Jahangir, thanks so much for taking the time out. What do you think implications of such a move or such a vote have? Because while most people anticipated this to happen, the magnitude of the defeat was a bit of a surprise. And what does this do to any of the emerging markets having equations with Britain and now wondering as to what the state of Britain would be 3 months down the line, and how do they approach their economic policies?
Look, I mean, what we are looking at is, question of what kind of trade and regulatory environment Britain will be in, and what would be their relationship with the European Union, and how does that change how emerging markets will have to deal with Europe and UK separately. But the point is that was already known since Brexit, that at the end of the day, there would be a different form of regulatory and trade customs arrangement in the United Kingdom, separate from that in the EU, and every country will have to have a separate trade deal or a regulatory understanding with UK that would be different from that with that of Europe. So I don't think that changes very much. I think the concern much more is what happens within the United Kingdom, because if you look at any of the estimates, our projections that people have done, including the Bank of England, including UK Treasury, that a hard Brexit or no-deal Brexit is actually going to have a very significant impact on the UK economy. And if you've seen the data that's been coming out over the last 2-3 months, growth has been slowing down, PMI has been slowing down, business sentiment has been worsening. So I think what is much bigger concern, even for emerging markets, is what happens to the UK economy in the event that there is actually a hard Brexit.
Yeah, but Jahangir, and I'll take the question after this to Raj Bhala as well, but the point is literally that I think the opinion has been, and I think Raj has written about this on BloombergQuint.com as well, that India should take this opportunity to maximize opportunities for goods and services exporters as well, renegotiate with the UK and EU and the WTA schedules of concessions, etc. Do you think EM economies could take that step as well? As you yourself mentioned, that there is a higher probability of the UK economy even sinking further lower from where it is right now.
Look, I mean, I know people do come up with these ideas about how to use a certain situation to their advantages, and emerging markets could strike a better deal, etc. But I really do not think that someone's misery is some other country's opportunity. That really rarely happens. So I think one needs to look at it as a problem in the global financial system, in the global trading order. And I don't think that there is anything positive that can come out of that. I mean, you can talk about people doing, advantages, deals, etc., but that rarely ever survives beyond a few years, even if you do the deal. So I'm quite skeptical about these arguments. It's the same argument about, the China slowdown. India should take advantage of it. I think we came up with that argument about 2-3 years ago, and see what happened with that argument. So you really have to, look at the situation and say, can an economy of the size of UK go through a terrible adjustment, and will anyone actually benefit from it? History tells us that no one benefits from something like that.
Interesting. Raj, your thoughts here?
Yeah, well, I would certainly agree that no one benefits from it. No one wants to see this happen. But as a legal matter, there's both a necessity and an opportunity here. The necessity is, for example, all Indian businesses that have or are thinking about getting contracts with UK businesses need to reassess those contractual provisions. For example, insurance clauses in them. Is insurance for goods or services going to be covered under those contracts with the UK out of the European Union? Then if you're an Indian financial service provider and you're thinking of going into or expanding in England, you have to think twice because you don't have that free passport into the mainland Europe, as it were. Then from the legal opportunity side, here there is definitely the important opportunity for India to renegotiate its goods and services schedules under the WTO with both the European Union and the UK. Many other countries are doing or thinking of doing that, including the United States. And then at the FTA level, the Indian government hopefully is looking carefully at the remarkably progressive and sophisticated FTAs that the EU has signed with, for example, Canada, CETA, and Japan. And the Indian government has to ask itself, do we want to be left out of this?
Okay, interesting. Well, as we said, multiple options exist as well. There could be a Brexit with no deal, no Brexit. There could be an Article 50 extension, as I read, or a second referendum. That's something that is not out of the realms of possibilities. So we don't quite know which route this will go down to. So let's wait and watch. My final question on this conversation, and that is to Jahangir Aziz. Jahangir, do you, just looking at all that's happened within the state of EU and the recent economic data coming in from across the world as well, how sanguine or circumspect are you of the pressures on the emerging markets as a result of all that's happening in the developed world, be it the trade talks and how they are progressing, or what's happening with Brexit and the UK economy, or the recent data that comes from the EU as well?
Look, all of those have turned into headwinds. I mean, there is no denying that the recent data flow from developed markets have been weakening, particularly from the European Union, and then you have to that the political uncertainty both in the U.S. as well as in Europe and the U.K. The government shutdown in the U.S. has now entered its 25th day, and lot is riding on it. For the emerging markets, does the new version of NAFTA actually gets passed through by the U.S. Congress? If that doesn't happen, then we have another problem concerning emerging markets at this point in time. So I think the headwinds have gone up, but at the same time, you get some relief out of the fact that in response to these global headwinds, the Fed and the ECB most likely are going to be much more flexible than in the past, than what they had envisaged before. And I think that flexibility provides you with some degree of space for emerging markets to breathe. So emerging markets do get pushed back by the slowdown in global demand. But at the same time, you get some offset coming out from the fact that financial conditions will probably be more benign than one would have thought back in the fourth quarter of 2018. This means that countries that are susceptible and vulnerable to changes in global financial conditions, which is basically the current account deficit countries in the emerging market world, India, Indonesia, South Africa, Mexico, Turkey, etc. Those are clearly the kind of countries that will benefit from the easing of global financial conditions. So, I'm not saying that, things are looking great. Things are worsening, but I think that, one shouldn't throw the baby with the bathwater just because global demand from Europe and UK are actually going to slow down.